We hear a lot about how the housing market and how it's continuing to price people out, especially here in the Bay Area. But what about fractional real estate investing? It's a concept that's been around for a while, but it's getting more attention recently. And joining us live to talk about that is Alex Blackwood, CEO and co-founder of Mogul. That's a real estate investment platform. First off, good morning, Alex. Great to have you here.
Morning. Thank you so much for having me.
Yeah, so we have to jump into it because you have to explain to people who may be not familiar, including myself, what is fractional real estate investing? How does it work?
Yeah, so fractional real estate investing is think of it as buying shares in a property, right? And so the idea being that, for instance, on our platform at Mogul Club, you go in, you select a property, you purchase however much or however little of a house as you want, and as a result, you get the dividends on a monthly basis, appreciation in real time, and tax benefits at year end.
Okay, so what's interesting is some people I think may think of timeshares. How is this different?
A little bit different. You don't get to stay in the property, which
Yeah.
isn't necessarily as fun, but you get the financial benefit of the underlying real estate and you generate income from people that are renting out your house either as a short-term rental or as a pad split.
Okay, so how does someone do this? Because my co-anchor had mentioned she's already seen maybe in Palm Springs listings that say co-owner. Is that what you would be looking for? How do you kind of get into this situation with someone else?
Yeah, so a little bit different. It's almost you're anonymous across the
Oh,
users
okay.
that are investing in the platform. So the idea being that when you come to, for instance, our site or any of the other platforms out there, you're logging in, you're investing in a property. You may or may not know the other users. There might be 50 or 100 people invested in an individual property. But as a result, you get the direct benefits of that underlying real estate in real time without any of the traditional headache that comes with investing in real estate the more traditional way. So we actually go out and we get a property and then we syndicate out or sell ownership in that property through our platform, if that makes sense.
Oh, okay. So that's interesting. How do you guys choose properties to offer?
Yeah, so we have a pretty rigorous selecting and vetting process. And so myself and co-founder are both at Goldman Sachs in their real estate private equity group. And we say that our property criteria, less than 0.1% of properties that we are shown make it to the platform. And so we have incredible partners that we work with that give us properties that fit within our specific buy box criteria. And if it meets our threshold of returns, we'll bring them to the platform for users to invest in.
Okay, so Alex, what's the minimum investment and what are the typical returns?
Yeah, so minimum investment is $250. However, I will say on average, we get between 5 to 10K invested per property. And typical returns for us were around 18.8% on an annual basis. And that's inclusive of about 10 to 12% of that return comes from rental income that's paid out to you on a monthly basis. And then about 6 to 8% comes from appreciation. So dollar invested, about 18.8% on that dollar invested year over year.
How do you respond to skeptics who might view this as just another trend?
Yeah, I mean, I think that trends have a history, at least in this type of industry, of staying around. And so the idea being that within properties, you're seeing home prices absolutely skyrocket. And I mean, traditional real estate, for lack of a better term, kind of sucks in the sense that you need a tremendous amount of capital, you need a ton of time to actually manage the property. And so, as real estate in the more traditional sense gets more and more out of reach for the average individual, you're going to need platforms like ours to access that high quality real estate for everyone.
Okay, and so I know a lot of people are probably wondering, well, what happens if a property loses money?
Yeah, so I mean, it's the same way that any traditional real estate investment could lose money. There's
Hmm.
obviously inherent risk that comes with any sort of property investing, whether it be in the more traditional or fractional sense. And so for us, there are a tremendous amount of risk mitigants that we put in place, whether it be a maintenance or vacancy reserve. So for instance, an asset on our platform could sit vacant for up to 12 months, and we would never have to call another dollar in the door. In addition, we take out several forms of insurance and contingency policies so that way you as an end investor is protected as much as you possibly could be. Not to mention you're investing in a limited liability company that owns an underlying asset as a result, you actually have limited liability on the underlying asset itself. So all that to say, it's not completely risk-free, but we do our best to mitigate that risk as much as possible.
All right, Alex, I'm sure that we could sit here and talk for hours about fractional real estate. I do appreciate your time this morning. And for our viewers, we want to make it clear we are not giving financial advice. We are just exploring the idea of fractional real estate investing. Always do your due diligence to look at platforms, fees, payouts, and everything in between, of course. Alex, thanks again.
Thanks so much for having me.